Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, December the 7th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on with some economic data. If there was any economic data, we would talk about it, but not really a whole lot going on across the pond. The only thing we really got here in the United States was the unemployment claims coming in with 236,000 in line with expectations, and natural gas storages came in with a 2 billion cubic feet build, expected to be a drawdown of 5 billion cubic feet. That's about it for the economic data. Anyway, on to the overall markets, let's say. Crude oil moving higher by about 66 cents right now after yesterday's sell-off, which was, I believe, a little bit overdone, especially when we saw the big drawdown in crude oil inventories. It's starting to look like it's going to rebound a little bit. I was thinking I probably should draw a trend line when I was sitting here talking just a minute ago. Maybe throw in a trend line here just to see what it looks like on this up move. Let's just pull it from the bottom here and see if I can get a trend line going without any problems, because I think it's lining up pretty good with that line there. I thought it was going to be a little bit closer to coming down to touch, but at the end of the day, it doesn't want to work out for me. So let's try and bash that idea. Anyway, thought that trend line might have gotten broken. It looked like it, just from the eye there. If I draw it from there, I think I could probably build it out. Maybe I'll set that up for tomorrow's webinar. But anyway, it's still trending upwards bullishly for crude oil. Now we've got gold futures coming off quite a bit as the equity side of the picture is starting to move higher. I've talked about this. Thought that move higher was a little bit overdone to the upside when we went up and tested 1300. Now we're back down to test this 50 Fibonacci level, which is what I was expecting for that move. And I, if you remember, have on a put calendar that I did for the webinars on put calendars. So that's kind of the idea. We wanted a little bit of a up move before we got this sell-off. Now we're getting that sell-off, which is nice, working out nicely for that put calendar. I haven't taken it off. I'm going to leave that on for a little bit longer just to get this move hopefully coming down and really test that, touch that 50 Fibonacci level, and that's probably where I'm going to be looking to pull the trigger. So I'm pretty close to getting out of that GLD trade. On to the bonds. They're moving higher despite the fact that we're seeing equities move higher. It's still bucking that trend of, or the conventional wisdom of bonds should be going down with the economic data that we're getting being pretty good. That should cause the bonds to come off a little bit, but they are holding steady at just up 2 ticks on the day, but still kind of bucking conventional wisdom, like I said. We've got the VIX moving off, still in double digits, but this has been really good because I kind of took all the margin I could in my margin account and leveraged it with all of this high implied volatility. You notice all the trades that I put on lately were high implied volatility, selling short options. So that is working out. We're starting to see volatility come out of a lot of these, and getting the kicker of directional moves. So I'm looking to cover a couple of trades today. I've got a couple of working orders in, and they're pretty close, but not quite there yet. We've got the Dow Jones Industrial Average on the highs of the day, up 100 ticks, let's call it, just over by a smidge, but we are on the highs of the day right now in the Dow Jones Industrial Average. That sell-off that we've seen, that kind of correction, profit taking going on. Yesterday's doji, really late day sell-off, kind of created a bottom there, and now we're getting a confirmation to upside. So it looks like we're going to continue on this bullish run. NASDAQ catching up, as they've been the one that was the dragger. We talked about this. A lot of those trades that I put on were in the financials that were getting a little beat up, and the tech sector. Tech sector starting to come back a little bit. So that's helping out on those trades. And again, volatility coming out helps as well. But the NASDAQ up almost 36 points as of right now. And E-mini S&P, similar situation. They didn't get that late day sell-off like the NASDAQ did. But again, it did get that doji to make it look like a bottom was created. You know, sometimes you get these two counter-opposing dojis and it looks like it could be a continuation, but it has since bottomed out, stayed above that 9-day moving average to continue that short-term trend to the upside, with the E-mini S&P is up 10 points on the day. And if we look at this chart on the 30-minute chart, you can see we are very close to the highs of the days that were high of the day. It's really kind of settling down right here at lunch, which we would expect. That's usually kind of when we see the volume come off, and then late in the day get those last minute pushes. Now, this is what I was talking about on a couple of trades that I'm looking to take off with MasterCard. You know, I haven't had on for very long, just really a couple of days. And with MasterCard, I sold the January 130 puts, and I'm really close to 50% of my max profit. I'm trying to get a couple extra pennies out of that with this volatility collapsing, the directional move. It might go up and just test. Well, it's probably not a real Fibonacci level now that it's kind of broken. But, you know, I like to leave those up there because it has a tendency to continue to hold on, you know, anymore with the high frequency trading. You know, a lot of times people talk about moving those immediately once you get a new high. I don't like to do that, especially when it's kind of lined up with several other things. You know, this one's lined up pretty closely with this point of control. I like it when that happens because it really makes these a little bit more robust. But having said that, this probably a move higher on this Fibonacci one for this particular level would probably make this line up just a little bit cleaner for the other market profile support resistance levels. So I'm going to be looking to do that as well. But if we start moving up a little bit higher, I think that this is still going to act as somewhat of resistance. As you can tell, it acted as resistance before. It should act as resistance again, and that's what I'm looking for, it to go up and test that level there. So on to Procter & Gamble. This was a trade that I put on for the downside with the January 95 calls that I shorted in there. Originally sold those for 39 cents. It is, for all intents and purposes, at 50% of max profit. If I got out of this one, I could just buy the offer and be at 50% of max profit. I think it was at 18 cents or something like that. So I'm just working a bid, hopefully to get hit here, you know, for a couple extra pennies. So right now, do I want the penny or the trade? I guess I want the penny. So working those orders, but keeping an eye on them closely. I'm not going to give up that 50% of my max profit before I cover those. So I'm going to be watching that pretty closely. That's about it for today. Haven't added any trades. Like I mentioned, my margin account is full at the moment. Need to take off some of these short calls and short puts in order to free up some margin before I can really start adding a whole lot of other trades, and just kind of waiting for those trades to get filled before I start adding anything else. So I'm kind of stuck in a holding pattern right now. But Friday's webinar we're going to be doing on the long puts. That's going to be a really good one, even for a trader that's been trading for quite some time. I'm going to be talking about nuances that we look for on the floor and when we saw a red flag for some of these trades, because on the floor we had to put on those trades even if we knew that it was the wrong environment, and try and get out of those rather quickly because we were market makers, and when paper came in we needed to make a trade. So I'm going to be talking about some of those pitfalls that you might run into that I can try and help you avoid, and if you're a newer trader, to avoid those pitfalls anyway, so before you start getting involved in options trading, so you don't get kind of turned off by them. All right, so go to protraderstrategies.com, sign up for that. If you can't take that, take it easy.